Hi dear traders, today is Tuesday, May 3rd, and I'm pleased to share a fresh market review prepared for InstaForex. I try to puzzle out why precious metals are losing in value. The underlying reason for that is China, in particular the lockdown imposed in Shanghai in response to the COVID outbreak. Copper was the first to fall prey to such restrictions. Silver quickly followed suit. Eventually, gold also went down. So the market of precious metals is going through massive sell-offs. You are aware that tomorrow the US Fed will raise its key interest rate. The market will trade under high volatility. The market braces for similar sharp and fast rate hikes like in the 20s. The Federal Reserve was following the same aggressive tightening 20 years ago. Meanwhile, the US dollar advanced across the board, including gold. In my opinion, gold is the opposite instrument to the US dollar index. Gold always trades against the US dollar. If you don't know, gold is produced at permanent rates worldwide. You may tell me that gold is a safe haven asset where traders hike their risks. However, the recent couple of crises revealed that traders prefer to invest in cash, not in gold. Nowadays, they also sell precious metals and accumulate dollars. The US stock market is sitting on the sidelines of the sharp rate hike by the US Fed. Stock investors are gloomy because Wall Street is taking a nosedive. Yesterday, stock rebounded from the lowest levels of the year and investors fixed profits. If the US Fed raises interest rates and Powell makes hawkish statements, the stock market will plunge lower. Financial markets are going to trade flat today and tomorrow ahead of the Fed's policy decisions. You should understand that it's better to refrain from trading on a flat market. Now let's discuss our charts. Gold closed yesterday with a strong sell pin bar. The metal closed on Friday with a trendy sell pin bar, so it would be nice to cancel long positions until better times. The price is following a clear-cut downtrend that cannot be stopped by one pin bar. I understand those who are opening short positions on gold because the Fed is tightening its monetary policy. More rate hikes will follow. At first glance, the fundamentals benefit the US currency. The thing is that no prophet can predict what will happen tomorrow. Expectations push the market up or down. What we see on the chart is traders' expectations. The market has been falling for 2 weeks in a row in the face of the Fed's rate hike. Those traders are betting on Powell's hawkish rhetoric. Nobody knows what Powell will say tomorrow. I wouldn't recommend opening any positions today and tomorrow. The market will learn the truth tomorrow night. If Powell is hawkish, gold will extend its downtrend. If Powell makes dovish comments, gold could reverse upwards. We should wait for some precise technical patterns tomorrow. Those who practice hunting for stop orders need proper targets apart from signals bars. For the time being, I don't see any good targets on the daily chart. Yes, we have a weekly double top at about $2,075. There is also the level of $1,675. Now the price is half of this move. There is a 50-50 chance of a further uptrend and downtrend. We could spot some intermediate targets inside this move. I want you to notice that silver is going down without any retracement. There is a target that has not been broken yet at about $21.5. I remind you that buying pressure was ruined in April a week and a half ago. The euro-dollar pair is still trading lower. Now it is trading at 1.05. The currency pair was trading that low in 2016. At present, the pair is moving towards the parity between the euro and the US dollar. It is challenging the lows of 2016. Some traders hide their risks below the extremum of 2016 as they believe that sellers will not hit this bottom. I have to upset them. The price has to move to 1,300 pips until the low of 2016. The price could reach this level in a day or two, thus activating stop losses of buyers. As for the pound sterling, the Bank of England will update its policy on Thursday following the US Fed. The sterling is weak ahead of the rate hike by the British regulator. Tomorrow, the US dollar will assert strength and the pound will fall. On Thursday, I guess the pound will appreciate following a rate hike and regain its previous losses. That's what I expect, and the average price will not change. If you are a fan of the price action strategy and look for reversal setups on this trading instrument, you will hardly find anything useful. Now the pair is trading under strong selling pressure. The sterling is a trend following instrument. It means that a trend continuation is more probable than a trend reversal. That's all for today. I remind you once again that if you open any positions today, tomorrow, they could be wrecked by a tsunami. I advise you to save your nerves and deposits for the day after tomorrow when the market grasps sentiments of dollar traders. See you online soon. Bye bye.